Alright, so in this video, we're going to build a 100% stock portfolio. This is a great, strategy for those maybe, let's say, 10 years, up until 10 years before your retirement. At that point, you want to put a little bit more fixed income and, smooth out the volatility of your portfolio. This can be cash, gold, or bonds. So we're just going to stick with 100% stocks today. So a recent subscriber sent me a great email here and recommended this book. Never heard of this one, but I might give it a read. So it's called The In Pursuit of the Perfect Portfolio. Basically, what I find is, all these books kind of say the exact same thing, but everyone kind of has their own little take on investing, and that's the part you got to read all the way through the book to find. So what they're recommending in this portfolio is 50% world index funds. So this is your 30% US based and 20% non-US based. So we're going to build a portfolio on Portfolio Visualizer and just kind of see what $1 million portfolio rebalanced will do. So I picked some of the popular funds that people use. VU could be VTI. Whatever your comfort level is there. But yeah, basically, so VU, that's going to make up our 30% US based. And VXUS, that's an international fund, that's going to make up for the non-US base. Now it goes on to say the next 10 to 15%, should be in a high dividend, high yielding stocks as well as real estate. So I'm not a real estate fan. I chose SCHD. A lot of people might want to see JEPI in here, but it pays distributions. It doesn't really focus on dividends. It's getting your income with covered calls. So the next one, it says global firms such as the S&P Global 100 Index. So I just chose VT. That's kind of your all around the world investment, no thinking needed. Basically, that one seems to be pretty popular. A lot of people should know that one. And the next one is, strategy in oil, natural resources, pharmaceuticals, and consumer staples. So I chose IHI. That's a healthcare, like medical device ETF. It's a pretty good one. And finally, the low price growth, looking for low PE ratios. So showed you guys this one recently, cows. So that's basically you're looking for, how I look at stocks as well, low PE ratios, lots of cash. So let's see how this portfolio performed. So we can see back to January of 2017. And there's again the breakouts. So I put 15% in the dividends, 15% in the global, 10% in the US medical devices, and 10% in the cash cows. And I spoke about VU at 30 and VXUS at 20 earlier. So this portfolio basically almost doubled from what we can look back, even with all the volatility in the market over the last few years. So it has a compound annual growth rate of 10.34%, a standard deviation of 16.02. So these are just great numbers, and a max drawdown of 22%. So, why I always recommend, putting more fixed income in your portfolio before retirement, it's going to smooth out the max drawdown. Let's say you finally hit that $1 million portfolio and then all of a sudden you lose 200,000. You're not going to sleep well at night. So that's why we add fixed income to the portfolio. But yeah, we're just focusing on 100% stocks for the younger investors today. So if I were to, let's say, tweak this towards more, the Invest USA, the app I made, basically I would probably switch out, diversify the international a little better. So Wisdom Tree DXJ, we can put 10% in that, and we can put Eden. Basically, that is, Denmark. We can put 10% there. And what other one? SCHD is all right. VT is all right. And actually, you know what? No, we'll put XLK instead of IHI, and we'll put a little bit of India. So this original portfolio didn't have emerging markets. So this portfolio is going to be, this the same 100% stocks, but it's going to be basically, I'd say it's probably around 65% US, 35% international. So I like to move things around. Basically, I've noticed that the international markets are, outperforming or doing a great job this year at least. So that's why I just like to sprinkle a few more of those funds in. So again, we can look back to January of 2017. And so you can see kind of just smoothing out your international allowed you to get a higher performance with a lower standard deviation. So this is why I like choosing, the independent countries in the international markets. And why, the calculator has two options. Basically, it allows you to just switch to another one easily to, help you with tax loss harvesting. So that's why there's two options in case you need to move it over to the other idea. But buying both, as you can see, is totally fine. A little bit of Japan, a little bit of Denmark did quite well. So that's really all I wanted to talk about today. This is a strategy. Who was it? I think it said some Siegel guy. Basically, everyone has their own little takes of the market, and we can learn from all these portfolios that these, asset managers taking care of billions, what would they do? So, hope you learned something today, and yeah, take care.